welcome out to today's advisory report. It is July 14th, 2026. Looking at our market regime gauges, the market condition is favorable. The intermediate trend and the short-term trend are both bullish. We are fully playing offense in our strategies. As you can see, our beta is above the benchmark beta as the market is trending above the 20-day moving average, and we are positioned to take advantage of offense. A good day today in the strategies as we are looking at the daily composites. The ultra aggressive up 2.33%, the S&P 500 up 0.36. Looking at our yearly returns, same with the ultra aggressive compared to the S&P 500. And so let's go ahead and jump on over to the trends. If we look at the intermediate trend, we can squarely see that price is above the 30-week moving average. And when price is above the 30-week moving average, our play is to be offensively biased, as we've done the studies, and we know there are more up days than down days, and we'll talk more about this. But looking at some of the statistics that we have here, 56% of the time, price is above the 30-week. We are having positive days, and when price is below the 30-week, only 45% of the time we have positive days. So in our strategies, we are looking to take advantage of the offensive nature above the 30-week, and we want to protect and be defensive against the losing nature of below the 30-week moving average. We'll talk more about that in videos to come. Let's go ahead and jump on over to the short-term trend. Here we can see we drew this triangle out a few weeks ago, and it has panned out to the upside as expected. A little bit more consolidation here, so not a complete aggressive confirmation up. We aren't at new highs yet. Anything can still happen, and we will be ready to play defense if we start to break down below this area. We don't want to hold this all the way down to the 30-week, which is this dotted blue line. Now be quite the drop. As a matter of fact, 6.25%. So we do play some defense in the short term, but right now everything is looking very, very offensive. Let's jump over to Market Lens and let's look at some of the positions that we held inside of the ultra aggressive account. Big moves for the stocks and ETFs that we had today. DLLL, the 2 times Dell, looking like it was up about 14.2%. A little bit of wick at the top, meaning that sellers met a little resistance at this previous high, but the close still higher than where we've been since we've entered. So we'll see if this wants to continue and really rock it out, but a good day there. CrowdStrike also, phenomenal day, closing at the top of the range. A big, powerful candle of 12.1%. Ultra aggressive strategy holders were loving it today. Goldman Sachs, another on earnings, a gap up and a gap up and go, up 9%. We've been talking about the XLF and why we wanted to be positioned in it. Looks like that panned out. Although the XLF sold off here and closed still up on the day, but Goldman Sachs definitely a driving force there. Still a little bit of disappointment in the Ultra Russell 2000, the 2 times small caps. An up day, but a down on the candle. Looks like the trend isn't ready to turn back up. A minor position for us, not the end of the world. And LLY, Eli Lilly, a gap down, but kind of a hammer candle as it kind of retraced and got back some of it. Still above our stop. As you remember, we took a position in here, took some gains, and now we're pulling back. So we'll have to see if this wants to turn up and go. This is a big liquid possible leader. Just has been a little choppy here more recently. See if that wants to turn back up, if that wants to stay in our strategy. That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.